Yes, December Consumer Price Index expected down 0.1, did not disappoint. Spot on, down 0.1%. No revisions to the data. If we look at ex-food and energy, it's up 0.2, also exactly as expected. Year over year, up 1.9. Year over year core, up 2.2. These numbers are totally in line. Let's look through the rearview mirror a bit. On the CPI headline year over year, that's 0.3 lower than our last look in November. Find that interesting. And on the core, it's exactly the same across the board. 2.2 expected, received, and that was our last look as well. For earnings, if we look at December, year over year, weekly earnings up 1.2, hourly earnings year over year up 1.1. These numbers are much better than the rear view mirror, up 0.5, excuse me, it was revised, up 0.6 on the weekly, so we've doubled that, and last look was up 0.8 on yearly, so we added to that as well. We popped a basis point, Joe, we're at 271 now. The 30-year really has been leading the rate increase charge, up at 304 right now, highest yield close of the year equaling yesterday. So we want to keep an eye on the long end as it distances itself as we see some backpedaling from Federal Reserve. It's steepening the curve ever so slightly as the short end seems a little less buoyant in the rise of rates than the long end. And finally, the dollar index has definitely been drifting lower. It was not too difficult to spot technically. It just took about 2.5 months to develop. And the euro versus the dollar, which is the bulk of the dollar index on evaluation, is also, of course, at a 3-month high, where this dollar index is at a 3-month low. But I caution, we really haven't moved all that much, but we want to pay attention to how much this affects not only the relationship between our currency and carry trade currencies like the yen, but lots of talk with China these days, and the Chinese currency has been steadily appreciating against the dollar. Let's see how long that's allowed. Wilf, back to you.
Rickster, thanks very much. See you again later in the day. Steve Liesman's also here with us on set. Steve, your take? Main number in line, but...
In line, but a lot going on inside it, right? 7.5% decline in gasoline prices. That's probably going to go away, right? So that comes back, and that's what's depressing the headline number. The core in line at 2.2% year over year, 0.2 on the month. So there's no inflation. There's just really no increase in the rate of inflation, right? I'm looking at some commodities are down 0.7. Airline fares down now 2 months in a row, pretty big. 2.4 the prior month, 1.5 this month. These are month on month, not year over year changes. Might reflect some of the softness we heard in the American Airlines earnings that were out there, that there's some softness in the fares that are going on. Prescription drugs down 0.4%. Obviously a lot going on there, and transportation costs down 2%. Obviously some energy in there. I'm looking again for the trade and stuff showing up in there, the tariffs. Very hard to find, at least at this level of detail. You'd have to go down more into the details to find that. But overall, you know, kind of muted inflation, and that's what the Fed is saying, that we're not seeing. We have no imperative to change rates right now.